Did you know that you can make money while the stock market goes up, as well as when the stock market goes down? Yes, that's right. So you can make money all the time, no matter if the stock market is going up or down. There are ways that you can actually make money from both sides. So let me show you how you can start to short the market. And right now would be a great time to start doing, especially since we are awaiting a sell-off in the next 2 weeks. Due to the massive uptrend that we saw for no reason, we are still dealing with a lot of the issues, and businesses will not just recover this quick. The stock market is overreacting in the positive, so it's about time when the stock market will go down once again. So take advantage by learning this from this video. What's going on, subscribers? Welcome to the Flaming Profits YouTube channel, where we teach you how to become a more profitable investor in the stock market, as well as through different other avenues. If you're new here, what are you waiting for? Make sure you subscribe, that way you do not miss out on any brand new videos coming from this YouTube channel. We want to educate you to be able to make more money online. That is what we are all about. Make sure you like this video before you get started. Also, leave me a comment down below at the end of the video on your opinion. And I do want to share some special links that we have for free money, free stocks, such as Webull. They'll give you 2 free stocks as soon as you get started. There is no reason why you would not take 2 free stocks. Robinhood, my favorite brokerage, will give you a free stock as well. All the links are in the description down below. And then for M1 Finance, an amazing brokerage, gives you free $10 so that you get started investing with them. So yeah, take advantage of these deals. Discover Secure Credit Card, a $50 sign up bonus. As soon as you sign up for the card, they'll give you $50 of free spending money. Alright, let's get to the video. So let's get to the basics first. The Dow Jones Industrial Average, in case you don't know what that is, it's basically an index that tracks the 30 largest publicly owned blue chip companies trading on the New York Stock Exchange. And a lot of people refer to the Dow Jones Industrial Average to know how the market is doing. And what is the Dow Jones composed of? Here are the 30 biggest companies in the United States, and that's exactly what the Dow Jones has. So if you take a look at this list, this is exactly every single company that is being tracked under the Dow Jones Index. So basically, when all these stocks overall go up, the Dow Jones goes up. When all of them mainly go down, the Dow Jones will have a red day. So yeah, that's pretty interesting. So now let me show you how the Dow Jones has performed over time. And to keep it short, it has done amazing. If you simply stick to investing in the Dow Jones over a long period of time, you're gonna make a lot of money. As you'll see here on the 1-year, 5-year chart, you always see that the stock is uptrending. Obviously, it had a huge sell-off right now because of what's going on, but this is especially when you should be investing more heavy, because you rarely see the Dow Jones at a cheap price. So anytime you see it at a discount, make sure you're buying shares of it. And you can do that by investing in an index fund that tracks the Dow Jones. So as you see here, the max chart, it is always making higher highs, but it does have sell-offs here and there. So let's cover the S&P 500. This will be important for what I'm going to teach you. The S&P 500 is a stock market index that tracks the stocks of 500 large cap US companies. And it's basically a representation of the stock market's performance, just like the Dow Jones. Some people prefer using the S&P 500 as a reference. Some people use the Dow Jones. I prefer the S&P 500, but that's just my opinion. And what is the S&P 500 composed of? It's all these companies that you see here. So it's 500. It's a lot to cover, so I'm just gonna scroll through them real quick. But I'm sure you'll recognize a lot of these. They're the largest 500 companies in the United States, so they're domestic based, but they are the biggest, so you'll probably recognize a lot of names. Yeah, so Google, Ultra, Amazon, Amcor. Let me speed this up to keep this short. How has the S&P 500 done over time? Let me show you just that. So let's look at the 5-day chart, 1-month chart, 6-month chart, 1 year, 5 years, and max. As you see here, you're going to see the same thing as the Dow Jones. They both follow a similar pattern where over time it always makes higher highs, but obviously whenever the stock market sells off, this one represents the sell-off as well. And yeah, so keep on buying whenever it bottoms out like this. But overall, if you keep investing in the S&P 500 over a long period of time, like with your 401k, you're going to make a lot of money throughout time. So yes, that's very important for you to know. So now let's get to the video on how you can short the stock market and make money while it goes down as well, other than buying more shares. So this is VOO, the Vanguard S&P 500 ETF. If you want to invest in the S&P 500, you can do it through Vanguard's ETF, and it's basically the same thing. It's just at a different price. So you'll be able to buy shares of the S&P 500 through Vanguard, and they're cheaper, $265 per share. And then let me show you how you can make money while the stock market goes down. So whenever the S&P 500 goes down, SPXU will basically short the S&P 500, and whatever performance the S&P 500 did for the day in the negative, this SPXU will basically mimic that, but in the negative sense. So if the S&P 500 goes down by 3%, this one will go up by 9%, and it's 3x. So every time it goes down, it'll 3x whatever the amount, the percentage change was on the S&P 500. So this is a great stock to invest in whenever the stock market goes down, because you'll basically get 3x the gain of the negative. And these are not long-term investments because they go down in value over time. Like if you look at the 5-year chart, it's always going down. That's why if you're gonna invest in the inverses of the S&P 500, make sure you do it in a 1 to 2 day trade. Just take your money, take your profits, because you do not want to be invested in the long term in these inverses. So this is how you invest in the Dow Jones. Like, you know how I showed you the VOO, Vanguard S&P 500 ETF? So this is the DIA. It's the Dow Jones ETF that you can invest in. So it'll mimic the Dow Jones. But whenever this one goes down, you're going to lose money. So that's why you can also invest in the inverse of the Dow. And I'll show you the ticker symbol. That way you know which one it is that's the inverse. And you can make money whenever the Dow Jones goes down. So this is SDOW. I've actually made money with this one before. And it basically shorts the Dow. So whenever the stock market goes down, it goes ridiculously high like this. It'll 3x whatever the performance was. So you see the overall downtrend on the 5-year chart. So make your money through 1 to 2 day trades using short indexes that are 3x leverage. That is how you can make money while the stock market goes down, as well as when the stock market goes up. There we go, subscribers. I hope that you learned something today. Now you know how to make money when the stock market goes down. When the stock market goes down, you can make money anytime. It is a common misconception that you can only make money when the stock market goes up. So let me know what you think of this video. Always make sure you do your own research and only do what you understand. Do not do something just because someone else tells you. Alright, make sure you subscribe to the Flaming Profits YouTube channel. Make sure you like this video if you enjoyed it, and also leave me a comment down below on what you thought of the video. I'll see you in the next video. Peace.